Good morning, everyone. Welcome to our BetaShares webinar for today. Today, we're going to be talking about crypto investing made simple, talking about how you can invest in Bitcoin and Ethereum through an ASX-listed ETF. I think this will be a really interesting conversation. We've got a great speaker joining us today. As you can see on the slide, but also on screen, we have Matt Hogan, who is Chief Investment Officer of Bitwise. Bitwise are a crypto native asset manager based in the US, and they've been a great partner of BetaShares for 5 years now. So it's great to have Matt with us. Hi, Matt.
Hi, thanks for having me. I'm excited to be here.
Great. So before we jump into the discussion today, just briefly, the information we provide is general in nature. And we do note that Bitcoin and Ethereum are relatively volatile assets, and it's important to take into account that level of volatility and risk and the chance of loss, of course, with any risky, more risky, higher risk asset class. But with that disclaimer out of the way, we wanted to take you through a short video which will describe the features of our new On24 webinar
Welcome
platform.
to the new BetaShares webinar experience. We have recently upgraded our platform to provide you with an improved customer experience during our live and on-demand webinars. The user console gives you access to multiple engagement tools that you can interact with throughout the webinar. Your console is made up of a media player, presentation slides, a question box, and related content. Depending on your own preferences, these can be maximized, minimized, and moved around on your screen by hovering over the right side of each tool. The navigation bar at the bottom of your screen also has extra functionality options such as leaving feedback, gaining CPD points, and reading speaker bios. We hope you enjoy the new webinar experience with BetaShares and the content that we provide.
Great, thank you. So as you heard in that video, there's some content that's available here. The bottom left-hand box, you can see, obviously dial in or out of the slides or zoom into our faces on the video, whatever you choose. So, just as a brief introduction, I'm sure most people on the call will be well aware of BetaShares. We've been obviously a real beneficiary of the growth in ETFs. You can see assets under management continues to grow, and we continue to see support for ETFs as a way of investing for Australians. Probably the stat on that slide that I'm most proud of is the fact that more than Australians trust BetaShares with their wealth. So that's something that we really do take seriously, and we appreciate your support. Matt, I'll just ask you to maybe give a bit of a background in terms of Bitwise, because there will be obviously a lot of listeners who are less familiar with your organization.
Yeah, absolutely. Bitwise, as you mentioned, is a specialist native crypto asset manager. We started in 2017. So for more than 7 years, we've been managing institutional, investor, and retail assets, helping them access the opportunities in crypto. We're the largest crypto index fund manager in the world. We run some of the largest crypto ETPs in the world, and we offer a variety of other strategies. I think if there's a thing that sets us apart, aside from having been in this market for 7 years, having lived through both bull and bear markets alike with a sterling track record, is that we really pride ourselves on what we're doing today, which is educating people about the risks and opportunities in the crypto asset space. We wrote the CFA's Guide to Crypto. We do talks all around the world. And I'm really excited for the conversation today, because this is what I most love to do, which is to talk to people about what this asset is, what the opportunities are, what the risks might be, and to answer their questions. So really excited to be here.
Great, thanks, Matt. And that photo there, that's you at ringing the bell at New York Stock Exchange, is that right?
That's right. Yeah, we were fortunate enough to ring the bell, open the U.S. market. That's the team. We're about 100 people, so you can only fit 20 on the balcony, but there was a bunch of people underneath cheering.
Very good. Okay, so we wanted to talk today about these really exciting new opportunities to get access to Bitcoin and Ethereum through the ETFs, which was recently launched. But by way of agenda, we'll talk a little bit about them. We also then want to provide a really, if you like, crypto 101 or take us back to basics in terms of the advantages and how cryptocurrencies have come about. And Matt will lead that discussion. But then beyond that, I really wanted to dive into Matt's expertise. He really is very knowledgeable in terms of the crypto ecosystem. Talk to him about some of the, the currents of change that are occurring right now, particularly, emulating out of the US, as well as, discussing some of the key drivers of adoption and the valuations and indeed price of these exciting potential investment exposures. And then finally, we'll talk a little bit about portfolio construction, as well as why you might choose to use an ETF to access these new assets rather than perhaps investing through a crypto exchange. So that's a bit of a run sheet for today. As I mentioned, we've just launched these new ETFs. We launched them just at the tail end of February. QBTC is our BetaShares Bitcoin ETF, and QETH, which is the BetaShares Ethereum ETF. These are designed to provide exposure to those cryptocurrencies, and you'll receive effectively the Australian dollar return of those particular assets. We access exposure to those underlying cryptocurrencies through investing in Bitwise New York Stock Exchange listed ETFs that invest in those assets. And indeed, those are some of the largest crypto ETFs in the world. And we'll talk a little bit about the mechanics of that investment process later on in the call. And we'll talk about the advantages and in terms of ensuring you've got an investment which is going to be just a great way to access these asset classes. But briefly, we sort of think about the insurance wrapper as one that provides that convenience, being able to access all your investments in one place rather than having, say, for example, a different trading account to access crypto. We talk about the investments of custody and regulation, and also the transparency that you get with an ETF, and we'll dive more into that. But before we sort of invite Matt to really give us a one-on-one, we thought we'd throw in a couple of quiz questions here just to get a pulse from the audience. The first one is, do you already own some cryptocurrency that you bought on a crypto exchange? And so we'll give you 30 seconds maybe to answer that question before we show the results of that quiz. I'll say that, personally, I do own some that I bought on a crypto exchange many moons ago. Okay, that should be enough time. It's a pretty simple question. Let's see what the results show. Okay, so relatively split, 41% who currently don't own that. They may have been individuals that did own on a crypto exchange and have since sold, whereas 50, so, slightly less than half don't currently own any crypto exposure directly via a crypto exchange. And we'll get into, the pros and cons of that as we go through the chat. And I wanted to ask this sort of second order question, which is, well, there are a lot of cryptocurrencies available, and we do talk, and Matt and I will talk a lot about Bitcoin and Ethereum. But, just to get a sense from the audience, how widely spread are investments for those that hold crypto assets? Do they hold, for example, Dogecoin or Solana, for example? Matt, what do you think we'll find here? Do you think we'll see a skew?
I think we'll see majority ownership of Bitcoin specifically, and then a little smattering and everything else. But I would guess we have at least one holder of each of those assets on this call. That's my guess. We'll see.
Okay, let's hope so. I think we've got a big audience, so let's see. I'll turn over the slide now. If you can submit any remaining votes. Oh, okay, that's interesting.
Wow.
It's probably more spread than I would have thought.
Yeah, I'm impressed by that. This is an audience that knows their crypto, so it's beautiful to see that.
Great. So just to start out that discussion, Matt, and this is, I think, an important place to start, but we want to go far deeper than this part of the conversation. Can you really sort of unpack what crypto is and provide some of those reasons why it's become such a successful emerging asset class?
Yeah, absolutely. And we'll only take about 5 minutes to do this because I know a lot of people are familiar, but we want to make sure we're all operating on the same level. And maybe it helps to hear how an institutional investor talks about this new asset class. So usually when I talk to people about what crypto is and why it matters, I talk about it as a major technological breakthrough. Right? The blockchain, the idea of a blockchain was a major technological breakthrough. It introduced something to the world that had never existed before. which is the ability to have a database that's available everywhere in the world, that updates in real time, but that's not controlled by any third party. And the reason that's important is it lets us do three things with money that we've never been able to do on a global basis before. And the first is that we can do something simple, which is move money over the internet at internet speeds. Depending on which area of the world you're in, your financial system operates at a different pace. But we all know that when we say wire money abroad, it takes an absurd amount of time. Here in the US, stocks settle in a day, bank wires take 2 days, bill pay takes 1 to 5 days. I know globally you have some places that are faster, some places that are slower, but in a world where we can get sort of anything delivered to our door in a few hours, it's kind of absurd that if we try to pay a bill, it doesn't instantaneously happen. And crypto can just do this, right? Because it's one database that's available everywhere in the world that updates in real time. If you want to move money or property from me in the US to you in Australia, we can do it within the next second or two. You can literally walk away with that money in a few seconds over blockchain. And that's incredible. If you think about it, you take something like the Bitcoin or Ethereum blockchain, it can move money or property faster than the largest banks in the world, even though there are no employees, no CEO, no offices. It's just a revolution. If we go back in time to when we used to have to mail letters versus now when we can send email and text, finance is still basically mailing letters, and crypto allows it to move into this modern age. But it's not the only important thing that crypto can do. It also lets you program money like you would program software. The financial services industry globally has been one of the industries that's been eating up a broader share of the economy. It hasn't been disrupted by automation in the same way that retail and other areas of the market have. And that's because money hasn't been programmable. So even simple things like buying something when you park money in escrow for a day, you have to hire a lawyer at this point to handle that escrow and then release it to you. But in a modern age where money is natively digital, there's no reason that should be the case. Why do we need that legal overhead? Why can't the money automatically execute to move to you when certain conditions are met? If we even think about something like a stock exchange, it's really just matching numerical orders. Why does it need an extensive back office to process those trades? And indeed, in crypto, we don't. We have what are called decentralized exchanges, which are software programs with no employees that process tens of billions of dollars of trades every week with no errors. So just like the internet let us program software to do many things, crypto lets you program money. And then the third one, and I love this example because it points out how the media can cover something as sort of frivolous, but it's really important. Cameron, you might notice this chart from Christie's. This was the first digital art auction. This piece of digital art, which you see here, called Everydays, sold for, I think it was $65 million. And people thought that story. It was crazy. It's second most most expensive living artist. And people thought it was crazy. And of course it's crazy, right? Someone paid $50,000 for a banana duct taped to a door. Art is crazy. But when I saw this story, I didn't think this is crazy because someone paid so much. I thought, why is this the first time we've had a digital art auction? Andy Warhol was doing art in the 1950s or 1960s on computers. There's been a digital art program at many universities for 10 or 20, 30 years. Why was it until today that we had the first digital art auction? And the reason is, until you have one database that's available everywhere in the world that's not controlled by any third party, there's no way to own a digital good. Because a digital good is just a string of letters and numbers. And even my 11-year-old can create a copy of that by pushing Control-C, Control-V. So until you have one canonical database that no one can monkey with, the only way you can control a digital good is if you trust your bank or your government or Mark Zuckerberg or someone to maintain that database. So the reason we had the first digital art auction ever is because blockchain introduces the idea of digital property rights. And the reason I bring that up is because this is a chart that looks at Bitcoin in US dollars versus US equities, gold, developed market equities, emerging market equities, and oil. And it looks at the returns over 1, 3, 5, and 10 years. And the TLDR is the only line you can really see as Bitcoin because it's had such dramatic returns over the last 10 years, right? Up 8,000%. And a lot of people wonder, how does this cryptocurrency that we don't yet use to buy coffee deliver these spectacular returns? Why does it attract so much venture capital investment? And the answer to that is because it's not just a new currency. It's a technology that lets us move money at the speed of light, program money like software, and have digital property rights for the first time in history. And those are very big ideas. We don't yet know all the ways this will change finance. But if you think about what the internet did to retailing or advertising or media or telephony, it really transformed those industries. And a lot of people are making the bet that crypto, Bitcoin, Ethereum, blockchain will disrupt finance and money in the same way that those other industries have been disrupted. So that's my 101. That's why I'm in crypto. That's why I've been building, an asset manager in this space for 7 or 8 years.
That's great background, Matt. Really appreciate you taking us through that. So I want to, sort of deviate from the slides and just talk about the current environment. Maybe we'll start back in early 2024, and Bitwise was one of that, the first wave of US ETF providers to provide an ETF that held Bitcoin directly. And we saw that sort of opened up, I guess, a new avenue for, for example, institutional investors to invest in that asset class. Can you tell us, what was that like, in the US and, working inside Bitwise and seeing that unfold? How was that experience, and what did it really sort of mean for the space?
Yeah, I mean, it was massive. As it took a number of years to get it through our regulator. And so there was a lot of pent up interest and a lot of pent up work. But once it launched, these ETFs became literally the fastest growing ETFs of all time. And not by a little bit. They pulled in $37 billion in their first year on the market. And for context, before that, the fastest growing ETF ever, there'd been 5,500 ETF launches in the US, had pulled in about $6 billion. And that had covered the NASDAQ 100, right? The leading technology index in the US. So out of 550 or 5,000 plus ETFs, the largest gathered 6 billion, and then Bitcoin ETFs gathered 37. And I think that's what that spoke to, was that there was huge pent up demand to access this asset in a familiar wrapper. Because the wrapper does a few things that are really important that people didn't feel comfortable with beforehand. First, it fit into the workflow of institutional investors in an easy way. They didn't have to set up a separate account, as you mentioned, or a separate app. And then second, it brought with it the regulatory clarity and the custodial clarity and the institutional trading architecture that made people comfortable to hold it. And I think a lot of people looked at these returns and thought this would be an interesting thing to consider in a portfolio, but what about the risk of buying it? Or how do I set up an app? Or how do I know who to trust? And so the ETF, at least for many investors, solved that problem in the US. And the response has just been, absolutely incredible in terms of the inflows.
Yeah, great. And can you give us a sense as to where those flows came? Was that predominantly retail mum and dad investors? Was it institutions, hedge funds? What was the sort of, what did the spread of investors look like?
It's a great question. I'm going to give a nuanced answer, which I know is complex. So the majority of flows were retail. In the US, institutional investors have to report their public security holdings every quarter. So we could see, for instance, at the end of Q4, after about a year on the market, 28% of the assets were held by institutions, which means the remaining 72 was held by retail or small professional advisors. But when I say that, that makes it sound like it's only retail. If you just took the 28%, these were still the fastest growing ETFs of all time, right? That was still more than had ever come into an ETF. So the answer is sort of everyone, everywhere, all at once. If you look at the holders, they're the largest hedge funds in the world. They're some of the most sophisticated family offices in the world. The sovereign wealth fund of Abu Dhabi bought $500,000 of Bitcoin. State pension plans in the US allocated to the Bitcoin ETFs, as did my father. And that's the beautiful thing about ETFs, right? They allow my dad to invest on the same terms as Abu Dhabi's sovereign wealth fund in literally the same product, which is an incredible thing. So it was sort of everyone, Cameron.
Great. Well, I hope your dad bought BitB, the Bitwise ETF. But I'm sure he did. So maybe just to take us through, I guess the next, major event for the crypto world has been Donald Trump really painted himself as a pro-crypto candidate. And, we had sort of been in an environment where the regulator, the SEC in the US, perhaps was, I guess a little bit anti-crypto or creating an environment of regulatory uncertainty. What has that sort of change in administration meant for the crypto landscape?
Yeah, I think it's really set us up for, a golden age of innovation and entrepreneurship in crypto. You're absolutely right that the SEC was hostile toward the crypto market. They didn't engage in significant dialogue. They engaged mostly in lawsuits, and they actually only approved the Bitcoin ETF because they lost a lawsuit in court where the judge told them that they were being arbitrary and capricious in denying it. And it wasn't just the SEC. The banking regulators made it very difficult for crypto companies to operate as well. They debanked a lot of crypto companies in a program called Operation Choke Point. So it was a very hostile, difficult environment to operate in. And we haven't just gone from that environment to neutral. We've gone from that environment to regulation being a major tailwind. The US government just last week announced it was creating a strategic Bitcoin reserve that will hold to start $17 billion of Bitcoin, as well as some other crypto assets. I think we're going to see stablecoin legislation in the US. The SEC has undone its lawsuits against many crypto companies. And we're soon to get something that's very overdue, which is basic market structure rules in crypto that, there was even a fight between different regulators in the US over who should regulate crypto. So it was really a mess. And now I think it's turned into a very positive environment. And what that means, independent of price, we could talk about what it means for price, but what it means really is you're going to see a large number of new crypto applications, and you're going to see large financial institutions building on crypto rails, and crypto will become an increasingly important part of the real world. So it's an extraordinarily exciting time here in the US from a crypto industry perspective. And I think that's going to, have an impact on crypto around the world.
Yeah, that's great. And it's also obviously, it probably frees up institutional investors and companies who are somewhat hesitant to invest in the space if there's regulatory uncertainty. It frees up their, I guess, compliance headwinds for those organizations to get involved. So I echo your thoughts there. Maybe just one question. I think David Sachs is the AI and crypto czar who's in the White House advising Trump. And it seems like he's prioritized as the first sort of piece of regulation, basically putting some certainty around stable coins. Maybe just briefly, what are stable coins and why has he decided to start there?
Yeah, absolutely. Stable coins are one of the killer apps of crypto. So stable coins are digital representations of a dollar that move over blockchains. And the beautiful thing about stable coins, they're a number, they're available everywhere around the world. So now everyone around the world can access what amounts to a place to store money in dollars, which in countries that face significant inflation can be a great safe haven asset for those people. Not only that, but in countries that have high friction costs in their financial ecosystem, particularly many emerging market countries where the financial infrastructure is very underdeveloped, they can use stable coins and blockchains to move money faster than we can in the most developed financial markets in the world. And so if you look at places in Latin America, in sub-Saharan Africa, stablecoins are increasingly being used for cross-border payments. And it's really revolutionizing how finance works over there. They can even matter in domestic markets. Here in the US, we pay a 2% fee every time we buy something that goes to the Visa network. And I think a lot of people are excited about the idea of getting rid of that fee, and stablecoins can drive that to a penny or less. So digital dollars that move at the speed of light for very low fees is what stablecoins are. The reason I think Saks, who's a phenomenal tech leader, is moving first with stablecoins is that everyone loves them. There's bipartisan support for stablecoins in the US legislature. Both parties support the idea. Stablecoins invest in US treasuries, which supports the US financing its debt, which is positive. And the largest banks in the world want to build in the stablecoin space because they realize the ability to sort of export US financial rails all around the world is an incredible business opportunity. I'll tell you one fun fact, Cameron. The largest stablecoin issuer in the world, a company called Tether, earned $13 billion in profit in 2024. By comparison, Goldman Sachs earned $14 billion. So the scale of opportunity in this space is really significant. And so I think you're going to see this space really grow dramatically in the near term.
Great. And I mean, I guess another point on recent market movements has been that the price of Bitcoin peaked around about the inauguration date. We're down now in around about $83,000 per Bitcoin, up a little bit overnight. Has I guess the reaction to Trump's presidency so far been one of slight disappointment? Is this a significant move, about 20% down? What do you make of the current price action?
Yeah, I think it's like when you give your kid 10 presents at Christmas and they complain that they didn't get an 11th. I think the crypto market is expecting too much. In particular, the crypto market has pulled back recently because this newly announced Bitcoin strategic reserve didn't immediately start buying more Bitcoin. Instead, it took the US government's existing Bitcoin, put it in a reserve, and said it would look at ways to acquire more Bitcoin in the future. From my perspective, that's a generational win. And I think that's going to mean other countries around the world are going to start looking at building a Bitcoin strategic reserve. And I expect in the US that we will, in fact, go add more Bitcoin to the strategic Bitcoin reserve. So I see this as a tremendous opportunity for long-term investors to consider if this is an appropriate entry point. Because from my perspective, there's just a huge amount of good news. I would add that Bitcoin has elements of being a macro asset. And of course, there's rising macroeconomic uncertainty around the market that's hit tech stocks and other equities. And I think that contributes to this. But at the end of the day, the big question in Bitcoin is, will it become a geopolitically important macro asset around the world? If that's true, I think the opportunity is significant. And from my perspective, the US calling it a strategic asset and building a reserve is a big step in that direction. So I think this is the market being a little silly and not looking long term. To me, the long term outlook is extremely positive right now.
Okay, great. Well, we've got two more quiz questions or poll questions for you today. And the first one is to really get a read of the audience. And I wanted to, basically ask all of you who are listening today what your expectations are for the price of Bitcoin. And I've quoted that in US dollars. So we did see that the price of Bitcoin went slightly above 100,000 US dollars early in December and earlier this year. So the price can move. It's currently sitting below that by $17,000. What's your expectations? Do you think that the price will be higher or lower than that magic $100,000 mark by year end, or indeed on year end? So that should be enough time to respond. We'll see what the results are. There we are. Okay, so most people would suggest that they think they're going to see pretty significant upside by year end. So that's good to get that sort of pulse. And then final poll question that we have here. And this is, more of a, sort of test your knowledge, if you like, of the crypto world. Can you tell us what you think the total market capitalization is? That is, what is the total value of all Bitcoins outstanding in the market today? And so we've got obviously 4 different options there. I'll leave that up on screen, ranging all the way from 19 trillion to 1.6 trillion. We'll see what we get as a group of answers here. And that's a pretty even spread there. Yeah, so that's actually interesting. I guess some convergence on the mean or the middle answers. I always like to say if you get a quiz question, the middle ones are more likely to be the correct ones. But no, in this case, Matt, maybe you should unpack this. Which one is it?
Yeah, I think this, it's, you know, the right answer there is the one on the bottom, actually. It's 1.6 trillion. I think this speaks to something important, though, which is there's a lot of discussion of Bitcoin. It's a very big topic. It's a very big idea. It gathers a lot of positive and negative sentiment, and it occupies a very big space, a bigger space in sort of the discussion space than in the asset allocation space. It's still relatively early from an asset perspective. So I actually think this is a phenomenally interesting result that speaks to something important about Bitcoin.
Yeah, that's actually really true, isn't it? I mean, we haven't had a webinar on gold, for example, for some time, but the $19 trillion, the first answer there is in fact the total value of all gold that's mined and stored as an investment there. So gold's total asset market cap, if you like, over 10 times. And then answer B is the market capitalization of Apple, and C, I think, is the market capitalization of Alphabet. So just showing the total value of all Bitcoins in comparison to some of the world's largest stocks, and indeed another asset class in gold there. So interesting to see that. And so maybe we'll move on to this next topic and really talk about, one of the probably the key questions, or talk around one of the key questions that a lot of people have. Matt, how do you value Bitcoin, or how do you sort of think about the prospects of this asset?
Yeah, I love that. I love that following that quiz example, because a lot of people talk about Bitcoin as digital gold. There was that famous book from a New York Times reporter early in Bitcoin's development that referred to it as such. Of course, it's not gold, but it is a way to store wealth in a sort of hard format. And I like this chart because I think people are sort of reflexively skeptical of that idea. But this chart sort of compares the various characteristics of Bitcoin and gold. And there are lots of similarities. There's a limited supply. There's only 21 million Bitcoin. There's a limited amount of gold. Bitcoin and gold are fungible. They're decentralized. You don't have to trust anyone to hold a gold bar. They're borderless. Obviously, Bitcoin lacks one thing that gold has to a tremendous degree, which is gold has been around for thousands of years. Bitcoin has been around for 15. So it doesn't have a long track record. But I would argue that Bitcoin has some advantages over gold in other characteristics. It's never been counterfeited. It's very low cost to store. It's portable at scale. Our Bitcoin ETF owns billions of dollars of Bitcoin. If it were gold, we would have to fly it around the world in an airplane. We can move it with ease. It's easy to send. It's easily to verify. It's divisible. So Bitcoin has these advantages as well as certain disadvantages against gold. But I think it's a fair comparison. Usually when I give that slide, though, people say to me, how can something that is this volatile be a store of value? Look at those giant pullbacks, 30, 40, 50+%. This is enough to turn your hair gray, Matt. But what I love about this chart, of course, is it's not a chart of Bitcoin. It's actually a chart of gold since the U.S. went off the gold standard, or started to go off the gold standard around the start of the 70s. The reality of the return of gold since then is we've had a few different epochs. If you look at that chart, we had a big run up from about 1970 to 1980. I would argue that was when the world figured out what gold's role was in a post-gold standard world. Would it be a barbarous relic, as Keynes said, or would it be an important macro asset? The world figured out it's still important. It has been for thousands of years, and the price rose up substantially. That second hill that you see starting around 2003, 2004 was when the first gold ETPs launched. And that made gold easy to access in traditional investor portfolios. And of course, that brought more capital into the space. And you saw gold's price go up substantially. And then that third sweep on the right is, of course, sort of the COVID era inflation. and the recent move into hard money. I bring all that up because one way to interpret sort of the incredible performance of Bitcoin over the last 10-ish years is we in a way have all three of those things happening at once, right? We have the world figuring out if Bitcoin matters, we have a Bitcoin ETF opening up opportunities, and we have, you know, an inflationary environment and people moving to a decentralized hard asset at the central bank level and others. And I think, you know, obviously it's not the same, but I do think that is contributing to the price. And the point of this slide is just that the idea of stores of value is they store value over long periods of time, not over a day, not over a week, not over a month.
Yeah, I think that's really interesting to sort of see that and look at how gold has behaved when we do think of it as a store of value. And probably a key point on the previous slide is we talk about it being an emerging store of value. And a lot of this is driven off the fact that it probably, you know, hasn't fully developed as an asset class. And what we really need to see is that increasing adoption, widespread adoption, before it behaves, you know, sort of more like that, you know, gold example in sort of risk off events. Which probably you know, draws to I think you're going to talk a little bit about adoption and some of the trends we're seeing there for that sort of mainstream you know, adoption of Bitcoin.
Yeah, absolutely. You know, we just point out that, you know, Bitcoin has use around the world. There are these billions of people that live in authoritarian regimes or places with high inflation. There are billions of people who rely on inefficient financial rails, and Bitcoin is a solution for them. And so, you know, when we look at the data, we see significant adoption in wealthy markets. We see rising adoption from institutional investors, but we also see significant adoption, particularly in markets that are facing, you know, high inflation or have authoritarian regimes where the ability to self-sovereignly hold a digital asset is a valuable service. And, you know, none of this is to say that Bitcoin fits the same exact use cases as gold. But it is finding an increasing number of users around the world, which I find interesting.
Great.
Maybe I'd spend a moment just quickly on Ethereum, if that's okay.
That'd be good. Yeah, let's do that.
Yeah. So, you know, the thing I like to say about Bitcoin and Ethereum is that when people think about these two assets, they're the two largest crypto assets by far. They often make an analogy to traditional currencies. They think about Bitcoin versus Ethereum, like we might think about the US dollar versus the euro or the Australian dollar versus the yen. And that confuses people because there's one global internet. Why do we need multiple internet-based currencies? But actually, the better analogy is here on the slide, which is a better analogy is to software companies. You know, Salesforce and Microsoft are both software companies, but they use software in different ways. One for sales CRM, one for word processing and Teams. A crypto asset is two things. It's an asset and a blockchain. The blockchain is just a piece of software, and it can be optimized to do different things. The Bitcoin blockchain is a simple piece of software. It actually can only do a few things. It can send Bitcoin or receive it, hold it, destroy it. That's about it. It's got a limited programming interface. Ethereum was developed after Bitcoin. It said, it's amazing you can send money around the world. What if we could program this to act like a bank or act like an art auction house or act like the rails for stablecoins? All stablecoins, or the largest share of stablecoins, are issued on the Ethereum network. So Ethereum can do more than Bitcoin. It's more flexible as a piece of software. And you might be wondering, why is Bitcoin bigger than Ethereum if Ethereum can do more? And the answer is in software design. Doing very few things makes your software more secure. The Bitcoin blockchain rarely upgrades. Ethereum upgrades regularly, more likely to introduce a bug. And I raise that because that's why they have different use cases. Bitcoin is not thought of as an emerging store of value, or some people call digital gold, because its logo is orange, but rather because its blockchain is designed to focus on security. And if you're building wealth, if you're securing wealth, that's all you care about. If you're interested in automating finance or making finance programmable, you can't really do that on Bitcoin, but you can do it on Ethereum. And as you get into these other assets, you have variations on Bitcoin or on Ethereum. I sort of raise that because the value case, the use case of Ethereum is different. if you think you want to invest in an emerging digital store of value, Bitcoin is really fine-tuned for that use case. If you're very excited about stable coins and the growth of sort of programmable money, Ethereum is the leading asset in that space. So they're serving two different audiences because they're two different pieces of software, just like Salesforce and Microsoft. And I think sometimes that analogy helps people.
Great. And we should get into this point in terms of I know there are lots of investors out there that have been very bullish on crypto and have been early adopters for some time. And I know some individuals who hold 100% or nearly 100% of their assets in crypto. But for most people, that would suggest that's probably not going to be the path for investing. And really interesting to sort of look at if I'm an investor that holds a traditional portfolio with stocks and bonds or defensive assets, how might I think about adding just a small fraction of exposure to Bitcoin or Ethereum through an ETF into that overall mix of asset classes? Matt?
Yeah, I think the way you described it is right. We think of crypto as sort of a hot sauce for your portfolio. It can make the whole thing tastier, but if you use too much, it's too much. When I think about what's crypto's role in a portfolio, I think about what are its core characteristics. And its core characteristics are, it's historically had high potential returns. That doesn't guarantee returns in the future, but it does have that. It's volatile, it's liquid, and then most crucially, actually, amongst all those, it has low correlations with other assets. So this slide is showing the correlations of, Bitcoin and Ethereum to US stocks and bonds and gold. And the same would be true on any sort of, global stock market. And what you can see is that the correlations are low, right? Any correlation below 0.5 is considered a low to moderate correlation. And there's no correlation to gold or bonds. What that means is that if you add a small amount of crypto to your portfolio, actually what the studies suggest, if you rebalance it, you don't see a substantial uptick in your volatility of your overall portfolio on a historical basis, because it zigs when the other portfolio zags. Now, if you put 100% of your portfolio in crypto, as you mentioned, you're going to have some big pullbacks. This asset regularly has 30, 40% pullbacks on the way to fantastic historical returns. But if you think about that as sort of a non-correlated or low correlated asset, it can make sense to have a small sliver in your portfolio. And that's for some investors. And that's what our studies have shown in this space.
Yeah, I think that's right. That's really talking about the benefits of diversification. I'll note that in launching these ETFs, we have what's called a target market determination, which suggests only a small allocation to these ETFs within a portfolio. But Matt and the team have been doing some great work in terms of modeling out what a traditional Australian investor's portfolio might look like if you allocate, for example, 1, 2, or even 5% of that portfolio to Bitcoin based on historical data, and really digging into the risk side of things, because I think that's important to consider. How much risk can you bear, and what risk does this bring to your portfolio? And I guess what I like to sort of think about crypto as an asset that does have that risk of substantial drawdowns. But then if we see that broad-based adoption may have upside of many times its current value. So it's just thinking about how much risk I can afford to bear for that particular opportunity. I'll note in Australia, SMSFs, if we look at the population of SMSFs, the total average allocation to Bitcoin in that group is 0.2% of their portfolios. So 0.2% of SMSF money is in Bitcoin. I think it's slightly skewed because there are I think it's 2,500 SMSFs that are 100% Bitcoin. But if it gives you any indication, small allocations can make a big difference to potential returns. Now, we should talk about these two new ETFs, Matt. So QBTC and QETH. And I've got here just a brief description because I think it's important for investors to really understand the benefits of investing in crypto assets through an ETF structure, and really the benefits that we're able to take advantage of as BetaShares in this partnership with Bitwise, using your institutional structure and the way you operate in crypto markets and the security you provide in terms of those operational processes. So as the chart shows here, in this case, QBTC invests in the US listed BitB ETF, which is managed by Bitwise. Now, I'll let you touch on this, but Bitwise is responsible for the execution. So when new investments are made, Bitwise will transact to buy the crypto asset, and then they're held in an institutional grade custodial arrangement with Coinbase. Matt, I don't know if you wanted to just provide some color as to the characteristics of the way you operate in this market and the reason for these sorts of arrangements.
Yeah, absolutely. And really thrilled to be partnered with you to provide this exposure. We hold the assets in cold storage with Coinbase's institutional custody unit, which is a separate entity from Coinbase, the app that you may have heard of. It's a regulated, qualified custodian. I think there are a couple of advantages to the approach that we use. One, Bitwise has been in the market for 7+ years. We due diligence all of the qualified custodians on a regular basis. And like many of the ETFs have ended up with Coinbase, they really do have sort of best-in-class custodial technology and arrangements and some sophisticated ways that help protect you against some of the sort of horror stories that you've heard in the crypto market. Most of those stories regard centralized exchanges that keep assets in a wallet that's connected to the internet and have lost assets in that way. And that's not what happens here. The crypto is deposited in cold storage with Coinbase. They sort of fracture the crypto into multiple different wallets, and they have insurance in place that adds an extra layer of protection. So we feel very strongly about the custodial arrangement. You've mentioned here the trading piece. That's another place where I think Bitwise is able to add a significant amount of value. Of course, what matters in an ETF is the price at which you buy and sell Bitcoin. And as one of the largest crypto asset managers in the world with 7 years of operating in this market, we have deep relationships with the largest institutional liquidity desks. And we put 7 or 8 of them in competition with each other to get the best price when we're acquiring or distributing our Bitcoin. And so I think I think we've created the best in class institutional setup. Again, we've benefited from doing it for 7 years and from the sort of cost advantages that come with being a large crypto asset manager. And we're really excited to work with you to bring this through QBTC to Australian investors.
Great, thanks, Matt. And indeed, I don't know if we mentioned it, but Bitwise is the world's largest crypto index asset manager. So rather than, for example, buying Bitcoin on an exchange and potentially facing risk that that exchange may be hacked, or alternatively having a private wallet where you've got your keys, where if you lose those keys, you lose access to your digital asset. And I've heard horror stories about people losing that very long password and not being able to access, or indeed having someone access that password and take your crypto assets with essentially no recourse or no way to get them back. Investing through an ETF, you benefit from this institutional arrangement. You benefit from really the scale of those that Bitwise really enables us to access best-in-class processes in terms of control and execution. And I think that's going to be really powerful for Australian investors. So I'll just briefly, with all good presentations, we should say that investing in these assets, there are risks to consider. We did mention them throughout the presentation. You'll receive a copy of these slides afterwards. So maybe just to go to some questions, because we did receive a lot of questions. We received around 100 questions prior to the webinar, and I can see we've got a lot in the Q&A box that are filtering through there too. And so we will try to answer some of these now. Others will endeavour to come back to you with answers if we can't get through everything. I'll just rattle off a few which I think we can hit pretty simply, and they may have been answered through the presentation. One of these questions is, what's your investment strategy? Are you trading Bitcoin, or are you simply buying and holding these digital assets within the fund? And the simple answer to that, which I hope came through, is that we are simply, when we see new investor flows, those flows are invested through the Bitwise ETF into the crypto asset. There isn't any particular active trading strategy where we're seeking to profit from a view on movements. It's really about providing access. So you as an investor can decide whether or not you want access to Ethereum and Bitcoin. And I should say the returns that you will receive will be essentially the performance of these crypto assets in Australian dollar terms. And then there will be the fee, which is levied, the management fee, 45 basis points, which will take off the performance. And that's essentially what you're getting there with all those sort of points of convenience. Matt, I'll throw this next one to you. This is perhaps a bit of a longer question, but can you talk us through some examples of real-world transactions that these currencies are being used for? Just a couple of examples really to bring to light.
Yeah, absolutely. So, we see stable coins built on Ethereum and transacted over Ethereum used to do everything from settling international trade between countries to funding venture capital investments to indeed, buying retail purchases. You're seeing a large number of traditional financial giants like PayPal launch stable coins for this very reason. And all that moves over the Ethereum network. Starlink, another example with customers around the world, Elon Musk's satellite network. Most of its payments are done over stable coins, which are built on the Ethereum network. On the Bitcoin side, today, it's primarily being used in a manner similar to other speculative assets like gold to store wealth. I believe in the future there's a chance that countries will want to settle transactions in an apolitical currency as they seek to search out alternatives to US dollar settlement. And I think Bitcoin will increasingly play a role in those international settlement transactions. So that's a space to watch on Bitcoin. And then again, on Ethereum, it's usually these stable coins built on that blockchain that are being used for these transactions.
Great. Thanks, Matt. Good to sort of get some sort of sense as to, where those crypto transactions are interacting with, if you like, the real world or outside the crypto ecosystem. There was just a question here. This is really for Australian investors. What are the regulatory considerations and tax considerations for an investor in these ETFs? Within the PDS for these funds, you'll be able to see the tax section, so you can go through that in detail. But in the ordinary course, if you were an investor in these funds, that they would be, gains or losses would be considered on capital account rather than a revenue account. And they are regulated just like an ETF. They are regulated by ASIC and monitored by the ASX. So you can really sort of, operate and invest with confidence there. And then there's another question, again, for Australian investors, SMSF investors, which are a class of people investing their retirement savings, Matt. Australian lingo there, but are Bitcoin ETFs suitable for SMSF investors? Well, the answer to that really lies in your SMSF trust deed and your investment strategy document. That will outline what your SMSF is and isn't allowed to invest in. So depending on how you've laid out those documents and whether you've allowed for example, ETFs or cryptocurrency, that will dictate what you are and are not allowed to invest in. So it's really a question for trustees. And then, Are these ETFs a pure play directly invested in digital assets, Bitcoin and Ethereum? Do they have the same beta as the underlying assets? Well, the answer to that is yes. The only caveat to that is you need to be thinking about the Australian dollar value of Bitcoin and the Australian dollar value of Ethereum rather than the US dollar value. It's the only thing to consider, but that's exactly the same as to if you were to invest as an Australian investor in Bitcoin yourself. And then, Matt, question for you. Is there a risk that the Bitcoin protocol gets hacked?
It's a great question. It's been working flawlessly for the past 15 years. I think the thing that people worry about really is quantum computing. Quantum computing theoretically creates a challenge for cryptographic systems. But I would posit that it's not something that I worry about day to day for one very simple reason, Cameron, which is the same cryptography that underpins the Bitcoin network actually underpins all of how the internet works. It underpins how military communications takes place. It underpins how all point of sale transactions take place. This RSA cryptography is at the center of much of what our modern world does. The reason that gives me comfort is people are working on quantum resistant cryptography, and that work is proceeding faster than the work on quantum computers themselves. So I believe that the Bitcoin blockchain, it hasn't been hacked. I think the underlying cryptography has been established for 30 or 40 years. And I don't think that quantum will pose a threat to it, because the quantum resistant cryptographers have to win, or else the internet will fail to function and our militaries won't be safe. And I just don't think that will happen. So there's my answer there.
Okay. All right. So that's obviously, if we were to see quantum computing crack our militaries, there would be greater problems. But good to see that. And the protocol has never been hacked, as far as I'm concerned. That when people talk about hacks, they're generally, it's an exchange or a commercial entity being hacked. Is that right?
That's exactly right. And that's an extraordinary fact if you think about it as a $1.6 trillion available market. No one has been able to hack it. It's because the cryptography is just so well established and so tough. It gives me a great deal of comfort.
Great. And I mean, just on that topic, there is sort of a question about someone's raised there was a hack from a Dubai-based exchange, Bybit, where the hackers, reportedly North Koreans, were able to steal $1.5 billion in value. Maybe can you talk to us a little bit about that exchange and that hack, and maybe differences between that group and Coinbase as a custodian, just to give people comfort?
Yeah, absolutely. That was the hack of the Bybit exchange. It was a very large hack. That money was held exclusively in a single wallet, and they were subject to a number of technological risks that don't apply into how BITB and other ETFs manage this with qualified institutional custodians. As just one example, they were keeping all of their money in a single wallet address, I believe $1.6 billion, whereas ETFs will fracture that into multiple addresses so that there's a limited amount at risk in any one area. Also, sort of the methodology of how ETFs work provide additional protections in terms of assets can't be sent but to a few locations. There are a number of security protocols built in place there. So I think the story around those hacks that you hear actually is part of the reason why people turn to ETFs and the institutional quality custody that they offer. Of course, you can't say with any absolute sense what will happen, but we feel very comfortable with the institutional custody setup that we have.
Great. Okay. Thanks, Matt. I can see, just looking through, there are lots of questions which, I hope that we've managed to answer through the course of our discussion today. Of course, if you had any sort of further questions, we will endeavour to get to them. There's also a wealth of information on our website. You can look at the brochures. There's a wealth of information there. And we will endeavour to have Matt back on to do another session, perhaps a slightly different topic, or just a straight Q&A for people, given the number of questions that have flowed through. I think that might be quite interesting, Matt, if you'll come back and join us again. Hopefully this wasn't too inconvenient to US time, but really appreciate you joining us. And it's just been great working with you guys. And I'd like to thank everyone on the call. Really means a lot to us, your support and engagement, coming along, listening to our webinars, hearing what we have to say. And we hope we can bring you, relevant and interesting content in the future. So from BetaShares and Matt, from you two, I'll talk on your behalf. Thanks very much for joining us today.